Good morning, good morning. Welcome to the day's morning blast. It is Tuesday, the 18th of March. It's 8:30 a.m. and it's myself, Ryan Paisley, and Mr. Michael Brown. But before we get started, I better get the legals out the way. As usual, nothing discussed in the Spaces session constitutes trading or investment advice or infers any kind of endorsement by PIQ Global Limited, traders PIQ or PIQ Suite, or indeed that of the hosts, which, as you know by now, is Mr. Michael Brown and Mr. Ryan Paisley. Good morning, Mr. Michael Brown.
Good morning, Ryan. Good morning, everyone. How are you?
I'm all right. How are you? I'm a little bit nervous. I'm
I'm very well, mate. I'm very well. Cable is north of 130 this morning, Rule Britannia and all the rest of it, and I'm 47 pips away. And I'm 47 pips away from a very nice lunch. So all is well.
I might phone ahead and see if they can start doing some specials.
What a kids menu for you?
Yeah. Well, anything to bring the price down, to be honest.
Well, yeah, true. Should we sort out our social lives another time?
Yeah, go on then.
Let's crack on. Good morning, everybody. It was an interesting day yesterday. Markets rallying, risk on to start the new trading week, despite what was arguably a bit of a mixed US retail sales number, but equities moving to the upside nonetheless, with the S&P 500 advancing by about 0.6%, notching a second straight daily gain, building on the 2% advance that we saw on Friday. The Nasdaq 100 rallying by about 0.5%. It's just worth noting, though, probably because I've got too much time on my hands, I did have a bit of a look under the surface of the market yesterday, and it was a pretty broad-based rally with just 32 of the S&P 500's constituents ending the day in the red. But it is worth noting that within those 32 were Nvidia, Tesla, Meta, Amazon, and Alphabet. Now, I haven't run the numbers on this, but I would imagine there have not been too many days this cycle where the index has gained, as near as makes no difference, 2/3%, but 5 of the so-called Magnificent Seven have actually ended the day lower. So I thought that was just an interesting stat that I would throw out there. Go on.
It should be called the Lag 7.
Oh, well, I think it was B of A were calling them the I can't say the bloody word.
Oh, he's doing it me. He's doing it me. He's done it Ryan.
Shit. Oh,
he's done it Ryan.
It's a word beginning with M. Just go and look it up. Yeah, it wasn't mediocre, but we'll move on from that.
But you can't say the word you want to say.
Shambles. Oh, God. Lunch is on my mind. That's the problem. In any case, away from the equity space, it was a pretty choppy day in the Treasury complex, although we did see some gains led by the long end of the curve and yields coming lower at the long end. 30-year yields fell by about 4 basis points. That in turn saw the dollar continuing to soften, with the mighty euro trading north of 109.5 this morning to its highest level since last October, and cable this morning trading north of 130 for the first time since last November. Some decent strength also coming through in the Antipodeans, actually. The Aussie and the Kiwi dollars both up by around about 1% apiece yesterday, and marginally building on those gains this morning. And just to wrap up the sort of market action before moving on, gold trading fresh all-time highs. The yellow metal trading to $3,025 an ounce this morning. We seem to have finally broken free of that round number. And WTI crude testing $68 a barrel to the upside yesterday, of course moving in the opposite direction that President Trump wants it to. In terms of fundamental developments yesterday, there are a few bits and bobs, but to be honest with you, it was a relatively slow start to what is going to be a very, very busy week. Perhaps a little bit of sort of calm before the storm vibes going on. On the data front, of course, February's US retail sales data being the highlight. Headline sales rose by 0.2% last month, below the 0.6% consensus, but a rebound from the 0.9% decline that we saw in the month of January. That said, the control group sales measure, which is, of course, the basket of goods that, or broadly reflective of the basket of goods that feeds into the GDP release, that actually rose by 1% on the month, rebounding from the 0.8% decline that we saw in Jan. So I think that really kind of took away some of the negativity that the headline print would have brought about. That said, we did have some undeniably grim data out of the United States yesterday. The Empire Manufacturing Index, this of course being the New York State survey, that fell to -20 in March, down from the 5.7, positive 5.7 that we saw in February, and that is the index's lowest level since January of 2024. And of course, this is important in terms of shaping expectations for the ISM manufacturing PMI that we'll get in a couple of weeks' time.
What was the expected on that? I've got in my head something stupid
like -2.
Oh,
so we're out by a factor of 10, which isn't too bad, I guess. Close enough.
Well, yeah.
It's a bit of rounding error, Ryan.
Quite.
I've made worse forecasts in my time, so I'm not going to comment on that.
Plus one.
In terms of other bits and bobs from yesterday, a few bits from Trump. Of course, he was chatting away. He has confirmed that he'll be speaking with Russian President Putin this morning on the east coast of the States. We don't have an exact time for that, but here in London, any time after about 11, 12 o'clock, that call could take place. And of course, do bear in mind that we might get some sources, stories, and leaks from that call before the official readout. It will also be interesting to compare the readouts as well. Do the US say have a broadly similar recount of that call as the Russians do? One thing that is likely to come up in those discussions, though, and this was reporting via Semaphore yesterday, is that the Trump administration have reportedly been discussing the possibility of recognizing Crimea as Russian territory. Now, of course, Crimea was annexed illegally by Russia all the way back in 2014. The US also reportedly pushing the UN to recognize Crimea as Russian territory as well. This is obviously very much against the line that the EU and NATO and everyone else has been taking thus far. So it'll be interesting to see what happens on that front. Sticking with Trump, he made a few other remarks yesterday. One of, probably the most interesting, was that he confirmed that Chinese President Xi will be coming to the White House in, quote, the not too distant future, which gave me horrible flashbacks to the whole phase 1 China trade deal nonsense. Sorry?
90% done.
Well, yeah, I was thinking, Steve Mnuchin and Larry Kudlow will be back in the White House before we know it at this rate. But one to watch on that front. Really, besides that, I'm struggling for a fundamental catalyst, to be completely honest with you. As I said, news flow was a little bit on the light side yesterday. We did have reports, actually, that I forgot to cover before the call yesterday, that Warren Buffett's Berkshire Hathaway, they've continued to raise their stakes in 5 of the big Japanese brokerages. Buffett clearly putting some of his cash pile to work there. And speaking of cash piles being used up, Crispin Odey has been fined 1.8 million quid for being a bit of a naughty boy, to put it politely, and banned from the financial services industry for life. But apart from that, it's about it this morning. I might go on the ski slopes if it's going to be that subdued every day.
Yeah, not surprised. Well, speaking of ski slopes, obviously Zach has been providing still from the resort on France, been providing us with the overnight news roundup. So some key headlines from that this morning. US tariff approach. Officials discuss simplifying upcoming tariff rates in a tiered system, but ultimately decided an individualized rates per nation. Meetings aim to craft policy aligning with Trump's priorities, yet allowing flexibility. So basically, it sounds like they're kind of making it up as they go along, which is kind of what we expected.
Can I just...
The US is expected...
Sorry, I was just going to say, firstly, the Wall Street Journal, what are you doing? That's like the most pointless story ever. Secondly, the big question with tariffs, and I haven't seen really anything by way of kind of reporting on this recently, we still don't know what the US are going to do in terms of VAT. Is VAT a tariff? Is it not a tariff? And I think that's probably the biggest question that we need to answer before the 2nd of April.
I'm still not utterly convinced. Funny enough, VAT is the next headline I'm about to read out. I'm not completely convinced. I'm not completely convinced that they fully understand how VAT works in different countries yet.
Of course they don't.
Of course I don't. But as I was about to say, the US is expected to factor in value-added tax used by many countries when finalising the tariffs. Again, everything is very fluid. It sounds like a lorry's about to reverse into my house. Vice President J.D. Vance has taken a more active role in shaping Trump's trade agenda. God help us. In market sentiment and flows, CTAs, which are commodity trading advisors for those not in the know, have stopped selling equities, with Goldman's predicting up to $90 billion will be global equity buying, up 45, upwards of 45 plus billion in the US over the next month if markets rally. That's gone to zero hedge. Bank of America survey out this morning shows allocation to US stocks saw its largest ever monthly drop in March, driven by stagflation, trade wars, and diminishing US exceptionalism. I'm quite proud of myself being able to say exceptionalism, especially after Michael's howler this morning. Academic economists warned Trump's tariff spending cuts could slow US growth or elevating inflation. No, I'll be honest, I'm not an academic economist, but I could have told you that.
Are they the same academic economists who were screaming for a fucking 75 basis point Fed cut earlier in the year?
I love how in tune with each other we are, because that's exactly what I was thinking. Hong Kong and China now. Hong Kong shares reached a 3-year high on Tuesday, fueled by tech giants. China's Global Times warned US tariffs would spark reciprocal high tariffs from trading partners, harming the US economy. China hasn't imported US LNG for 40 days now as traders reroute shipments to avoid tariffs. China renewed export registrations for hundreds of US pork and poultry plants, but beef plants exports remain blocked. If you remember, we reported yesterday that the beef ones won't get renewed. So basically, the only bit of news here is that the pork and poultry ones have done. HSBC upgraded China's 2025 GDP forecast to 4.8 from 4.5, 2026 to 4.5 from 4.4. Sorry. Foreign inflows into onshore Chinese assets hit a record in February, partly due to DeepSeek's tech breakthroughs and waning US exceptionalism concerns. That's twice I've used that word today.
You're on fire this morning, mate.
Mate, can't stop, won't stop. Japan, Finance Minister Kato said markets should set rates after the 40-year JGB yield hit a record high. Goldman Sachs economists see wages needing 3% growth over 2 years for sustainable BOJ inflation. Canada and Europe now. I swear to God, it was the AI that linked these two together. It's not me saying that Canada should be an EU nation, which I've seen a few touting for yesterday. Canadian PM Carney visits UK and France. We just can't get rid of him. Emphasizes strengthening ties with reliable allies over US friction. Germany's Chancellor in waiting, Merz, has expressed confidence in passing a €1 trillion defence and infrastructure plan in Tuesday's parliamentary vote. Keep an eye on that one. A Dutch coalition official warned that Brussels' push for additional EU borrowing could trigger a new debt crisis. UK Trade Secretary Reynolds is in Washington, hoping to deter possible US tariffs. Britain's digital tax.
Oh, good. That would do it.
Yeah, exactly. Obviously, Britain's digital tax remains very controversial in the eyes of the Trump administration, so one to keep an eye on that front. The SNB made no substantial currency interventions in late 2024. Bullshit. Continuing a year-long pause, that's according to Bloomberg. Asia Pacific, RBA, that's the Reserve Bank of Australia. No, do I not get any credit for getting it right this time?
Well, no, it's just kind of expected from someone who's worked in the markets for 2 decades.
I like to say Royal Bank of Australia. The central bank is more cautious than markets about further easing. New Zealand's dollar jumped to a 3-month high on improving Chinese outlook. Indonesia's main stock index fell 7% amid concerns over weakening consumer spending and costly spending plans under the president. I'm going to skip that.
Yeah, was it Prabowo or something, isn't it? Is that him?
Yeah, that's the one.
There we go.
Yeah, exactly that, what you said. Geopolitics now, Ukraine-Russia talks. Trump says many elements of a potential Ukraine deal are agreed, though significant obstacles remain. As Michael said just now, the call is scheduled for today, so be on alert. Call it, have up your PIQ platform and keep on ahead of the market-moving news as it lands. Shameless plug. Observers are expecting modest diplomatic pleasantries, with Moscow showing minimal shifts in war aims. Moving over to the Middle East now, Israel launched strikes on Hamas in Gaza, threatening further conflict after hostage release talks stalled. There's also a headline I've seen this morning where it's being suggested that the Trump administration or Trump himself gave Israel the green light to start attacking Hamas again. Canada's F-350, the fighter jet, rethinking that. PM Carney cites a shifting geopolitical landscape and aims to secure more defence production in Canada, raising doubts about the previously planned F-35 purchase. DeepSeek ban. US Commerce Department bureaus banned Chinese AI model DeepSeek from government devices, citing data security concerns. I know Tom Talks Cars, if he's listening, will say, oh, everyone's got the same concerns. But yeah, to be honest, I don't blame them. I wouldn't be using DeepSeek myself if I was running a government. In corporate and market news now, Alphabet reportedly in talks to acquire cybersecurity startup Wiz for around $30 billion, potentially Google's even largest ever acquisition. Tesla short sellers
whizzing ahead with that one, aren't they?
Oh yeah, well yeah, whizzed it up the wall. Tesla short sellers earned $16 billion from the EV maker's share price decline this year. Also, Tesla have raised prices for the refreshed Model Y LR all-wheel drive version in China to 313,500 yuan, extending the 8,000 yuan Model 3 insurance subsidy until end of March. Microsoft is partnering with a Swiss startup to deploy an AI model simulating mammalian brain reasoning, targeting financial trading, robotics, etc. So basically, an AI brain to trade against you. There you go. Anthropic, who make Claude, which, if I remember correctly, is Michael's favorite AI. The AI startup focuses on enterprise use, preparing new business-orientated features, eschewing a mass market push. What else we got here that's worth talking about? Housing finance shake-up. The FHFA replaced boards at Fannie Mae and Freddie Mac, installing its own directors as the chair in both cases. Obviously, we've still got a push for people calling for this to be privatized. Am I a lot quieter? Sorry if I am. I was leaning back a little bit, so I apologize for that. NEO and CATL announced a battery swapping partnership, continuing China's push for alternative EV charging methods. So just on this, I do think the battery swapping kind of idea, the model, is very, very promising, and it's been used in China for about a decade now. I remember years ago seeing videos that basically a taxi pulls into basically it looks like a drive-through, McDonald's basically. But when it's sat there, like a little robot comes up from underneath, takes the battery out and puts a new one in, and it took like 30 seconds. And bear in mind we are worried about charging times and what happens to batteries when they finally start diminishing. I think that could be something to really keep an eye on. That would be an industry or a segment of the industry I'd be very keen to keep my eyes on. And finally, from me, BYD shares hit a record high after unveiling new charging technologies. This was what we put out, PIQ put out yesterday. It's like 1,000-volt charging. Basically, I think they said they'll charge a 250-kilometer range in like 5 minutes, if I recall it correctly, but don't hold me to that. But that's it from me. Apologies if I was a bit quiet. I did lean back in my chair for most of the session. Back to you in the studio.
Good stuff. Thank you, Ryan. In terms of the day ahead, then, of course, a couple of things that we are keeping an eye on all day. The first being that phone call between President Trump and Russian President Putin. And the second, of course, being that vote in the German parliament on defence spending, which you would expect to pass given recent reporting. But nonetheless, you can't be sure of that one until the fat lady sings. In any case, in terms of scheduled events today, there are a few bits and bobs on the calendar worth bearing in mind. At 10 o'clock this morning, we get the latest ZEW sentiment surveys out of Germany. The expectations index, that's seen rising to 48.3 in March, up from a prior 26. That would be the highest level since February of 2022. And I guess that's what unleashing €500 billion worth of defence spending does to sentiment within the economy. The current situation metric, meanwhile, that's seen rising to minus 80.5 from a prior minus 88.5. In terms of the afternoon session, we kick things off at 12:30 with the latest inflation figures out of Canada. CPI, that's seen having risen by 2.2% on an annual basis in February. That will be up from the 1.9% pace that we saw in January. Of course, that figure comes after the Bank of Canada delivered a 25 basis point cut last week, their seventh cut of the cycle, and with money markets pricing about an even chance of another 25 basis point cut at the April meeting. Plenty of figures due out of the States this afternoon as well. We get February's housing starts and building permits figures also at 12:30. And then at 1:15, we have last month's industrial production data, where production is seen having risen by 0.2%, down from a prior 0.5%. In terms of other bits and bobs, we do have supply out of the States today, a 20-year auction, $13 billion worth, being sold off at 5 o'clock this afternoon. And today's central bank speakers come from the ECB's Villeroy, Escriva and Rain. Of course, the FOMC still in their pre-meeting blackout period as the two-day policy meeting gets underway today. The other thing to bear in mind is, of course, overnight we have a policy decision due from the Bank of Japan. As always, no specific timing on this one, but probably sometime between 3 and 4 o'clock in the morning here in London. The BOJ set to hold the policy rate steady at 0.5%, with focus falling primarily on their policy guidance, particularly if UEDA and Co. set either an explicit or an implicit ceiling as to how far the policy rate may rise, and also whether they have any comments of the ilk that Ryan was describing a moment ago around the recent sell-off that we have seen across the JGB curve. And that is pretty much it today.
Magnificent, Mr. Michael Brown. Thank you very much. And listeners, thank you as always for tuning in. And yeah,
even if they couldn't hear you.
Even if they couldn't hear me, check out PIQ, check out Michael Brown, check out Pepstone. Yeah, and we'll see you all tomorrow. Take care.